Good afternoon, and welcome to the end of week market review for Friday, March 22nd, 2013. Today we're going to be covering a few things off. First off, we're going to take a look at the market news. Here, we just want to see what's been going on a global scale. We're going to be taking a look at some economic reports, and then looking at some charts for both the S&P 500 as well as the Toronto Stock Exchange. While we're looking at these charts, we're going to be focusing on daily charts as well as weekly charts. While we do that, we'll be looking at short-term and long-term time frames. We'll be looking at the volatility index, and then finally, we'll end things with a great pick that we saw just the other day, actually. So first off, we can see that the markets did end up the week down. The Dow Jones is only down 0.01%. And with the S&P 500 down 0.24%. It did end up having a little bit of troubles with some concern that was coming out of Cyprus in Europe. All in all, though, as some of the tension has eased, we were able to see a positive day today. We can see that oil is up 0.30% from last week's close. This puts it to $93.73 per barrel. We could also see that silver is down 0.10% from last week's close. This puts it to $28.71 per ounce. Gold is up 0.99% from last week's close. This puts it to $1,607.40 per ounce. And finally, we could see that the US-Canadian pair is up 0.40%. This puts it at 1.0235 pips. Right now we're looking at the economic reports for the week that we've just gone through. And we can see that on March 21st, we had our jobless reports where they were expecting 345,000 reports. Instead, we had 336,000. Because we had a lower than expected jobless reports, we did end up with a good day there on Thursday. But all in all, we could see that the markets still were struggling with the concern coming out of Europe, and as a result, we ended up with a mixed week. All right, looking at the S&P 500 here on the daily chart, you can see the short-term resistance and support that we've started to draw. We can see that it's really trading quite tightly between these two lines, with its overhead resistance around 1560. Now the MACD is flat bullish, and with the black line still below the blue line. If we could see a breakthrough where we end up crossing up above the blue line, and we could see a breakthrough above this upper trend line, we could expect further gains. But we are going to be concerned that we won't necessarily be able to break through this resistance while the MACD is still trading undercrossed. And here we're looking at the S&P 500 on the weekly chart. You're going to see that things look quite positive still, with there's still plenty of room for it to work itself upwards. Obviously, though, we can see that it's definitely trading in higher highs, and as the S&P 500 continues to grow higher, there really becomes the question about how far is too far. Now, when is that pullback going to happen? Very possible that we'll be seeing that over the next week or two, especially with the weakness in the daily MACD. Here we're looking at the S&P 500, again on the weekly chart, but this time we're looking at 5 years worth of data. What we can see here is that we really are at some all-time highs. The S&P 500 has not been this high since at least 5 years. So we really should see that although there will be some pullbacks coming, we don't need to be that concerned. We've had plenty of pullbacks along the way, all of which were reversed with new highs. So if we do have a pullback, you know what? That's all right. It just gives the markets the opportunity to settle themselves down and find new buying opportunities. All right, right now we're looking at the Toronto Stock Exchange. While we're doing this, we're starting off with the daily chart. A couple of important things to note is that yesterday it did break down below its support level, with it looking to come back up and test that resistance line now at 12,760. Unfortunately though, the MACD is declining bearish with the black line down below the blue line. So things aren't looking very good for the TSX now that it's broken down below support and broken into bearish territory. If we look at the TSX here on the weekly chart, you're going to see the tight trading range that it's trading within. It's definitely gotten a lot flatter than it had between June moving forward. Here we're looking at the TSX on the weekly chart again, but this time we're using 5 years worth of data. What we can see here is that the TSX has been trading quite positively since the middle here of 2012. But with the overhead resistance still in the way right now, we need to be concerned as to whether or not it's going to continue its gains. Obviously though, there's plenty of cycle highs, which we still have, that the TSX could reach before it's in its 5-year highs if it wanted to mimic the S&P 500. While looking at the volatility indicator, we could see that it is up 20.09% from last week's close. Now it seems like that's a large gain, and it certainly is, but we also need to keep in mind that the volatility indicator seems to fluctuate quite a bit. It's not uncommon to see 15 to 25% increments throughout a week. Right now it's at 13.60, which happens to be right in between the common trading range that we established throughout January and February. That was between 12 and 14. Obviously though, it has gone higher. It can go between 14 and 16 and even upwards to 18 without a whole lot of concern. Obviously though, if it starts to get up above that, we would need to be much more cautious. If the volatility indicator works itself back into its 30s, that's when we really need to be concerned. Now, right now we're looking at one of our great picks that we actually had yesterday. Our Canadian ITL customers, we're looking at CA.SLW, or Silver Wheaton. Now, because this was on the watch list yesterday, we ended up having our gains the next day, which was today, on March 22nd. All in all, our customers were able to see a 1.20% increase on this trade. Not a bad day's trading at all, considering the markets themselves have been doing quite poorly. Now, if you have any questions about anything that we've discussed today, or if you'd like more information on our ITL picks, feel free to either email us or phone us at the email address and phone number which is listed on the screen. We'd also like to remind you guys that whenever you're trading, you always want to make sure that you're falling back on your predetermined trading plan. Any trading decisions that you make are your own, so make sure that you trade with caution. This has been the end of week market review for Friday, March 22nd, 2013. Ciao for now.